Greetings and welcome to the latest episode of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their owners re-domesticate out of increasingly unpredictable legal and tax environments like Delaware to predictable pro-entrepreneurship, pro-growth states like Florida and Texas. Today, I'm reviewing a so called thought leadership piece by the white shoe law firm Hush Blackwell entitled Dexit. Is Delaware losing its corporate crown? And is Texas or Nevada next in line? And that is phrased as a question. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and certified public accountant serving clients in matters of business, tax, and commercial law throughout the states of Florida and Texas. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, as well as a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications covering accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. For decades, the default answer to where a company should incorporate was Delaware, and now that default is breaking. The trend has a name, Dexit, D-E-X-I-T. Tesla redomiciled to Texas. ExxonMobil, which has been incorporated in New Jersey, announced in March 2026 that it also would redomicile to Texas. TripAdvisor and Dropbox reincorporated in Nevada. Bill Ackman's Pershing Square announced plans to redomesticate to Nevada and structured a roughly $64 billion acquisition vehicle through a Nevada incorporated merger vehicle listed on the New York Stock Exchange. Mark Zuckerberg has reportedly considered moving Meta to Texas. When companies of this scale are changing their state of domicile, this is not a trend or an aberration. Rather, it is a structural shift in how businesses, large and small, evaluate the incorporation decision. The catalyst was a series of Delaware Chancery Court decisions that unsettled the business community. A recent decision involving Elon Musk blocked a $56 billion compensation package plan for Tesla's founder. And a similar decision constrained the scope of shareholder agreements in ways that practitioners viewed as contrary to accepted market practice and reality. Now, the Delaware Supreme Court later overturned the Musk decision in his favor, I might add, but the damage to Delaware's reputation for predictability and reliability was already done. Elon Musk posted publicly that no one should incorporate in Delaware. That statement carried weight because other CEOs shared his concern. Now, Delaware responded, as states often do, with more legislation. Senate Bill 313 in 2024 explicitly overruled 2 Chancery Court decisions. Senate Bill 21 in 2025 went even further, limiting liability for controlling stockholders and directors in certain conflicted transactions. But Senate Bill 21 generated its own problems when reporting revealed that the governor's office had worked with lawyers from Tesla and Meta in drafting the bill. I don't know about you, but some people would call that a conflict of interest. The perception that Delaware's laws are now being written at the direction of individual companies does not inspire confidence in the system's neutrality, to say the least. Now, Texas has moved to fill the gap. The Texas Business Court launched in 2024 with judges required to have at least a decade of relevant experience. Texas amended the Texas Business Organizations Code through Senate Bill 29, codifying the so called business judgment rule, permitting jury trial waivers and governing documents for internal entity claims, and allowing corporations to designate a specific Texas court as the exclusive forum for such claims. Texas applies its franchise tax only to corporations with at least $2.47 million in annualized total revenue, though that figure is expected to increase further in subsequent years. Texas does not impose a personal income tax. Delaware generates substantial revenue, on the other hand, from annual franchise taxes on domestic corporations, and that cost falls on every entity domiciled there, regardless of size. Although, of course, the exact magnitude changes depending upon a number of factors. For business owners who are not running Fortune 500 enterprises, this matters just as much. If the largest corporations in the country, indeed in the world, are leaving Delaware for Texas, among other states, that signals a change in the legal and tax environment that applies to every entity domiciled in states with unfavorable tax regimes or compliance frameworks. Redomestication is the lesser known legal process of transferring a company's state of domicile to a new state without dissolving it, without creating a new entity, and without triggering federal income tax when performed with the requisite formalities under the Federal Internal Revenue Code, Treasury regulations, and the statutes of both the destination and departing states. The company retains its existing federal employer identification number, contracts, credit history, and bank accounts when a redomestication is performed by a competent attorney. Now, oftentimes I will speak with clients and they will tell me they were suggested to file what is known as a foreign entity registration statement to move their company, and that is bad advice. Foreign entity registration, also referred to as foreign qualification, amongst other terms, does not change the company's legal domicile. In fact, it keeps the domicile the same. It keeps the entity in the former state and merely adds a second compliance track with ongoing fees, reports, and tax obligations. Meanwhile, a traditional merger, which should be distinguished from redomestication, creates a new entity in the destination state, may require a new federal employer identification number, and can trigger serious tax consequences and contract assignments or renegotiations. Finally, dissolution is really not an option at all, but I address it because so often folks receive really horrible advice telling them to dissolve their companies, which in most cases makes no sense. Dissolution terminates the company. Okay, it is only entering the conversation, or I should say, should only enter the conversation if the company is shutting its doors. Dissolution is not a relocation mechanism, it is a liquidation mechanism. And none of these so-called alternatives preserve the legal continuity the way redomestication does. Now, redomestication addresses the entity, but I have to point out, if the owner remains a resident of a high tax state or the business continues operations there, that state will likely maintain what is known as tax nexus. Redomestication, when paired with a change of personal residency and that's an important and, a reduction or cessation of business activity in the former state, can reduce or eliminate state tax exposure. The entity piece is what I handle for clients. In fact, I've handled hundreds of redomestications with a 100% success rate to date. And in most cases, I am able to work with clients on a flat fee. Now, Tesla left, ExxonMobil left. The question is not whether the redomestication trend is real. The question is whether you will follow suit. If you have questions regarding potentially redomesticating your existing limited liability company or corporation, Please use the link in the description for more information on the process and to schedule time for you and I to speak one-on-one about your specific scenario. Again, my name is Chad Cummings, and I hope that you found this information helpful. As always, the information in this presentation, like all of my presentations, is necessarily general in nature, and it is not legal advice, because legal advice definitionally must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my earlier presentations, please visit my firm website at www.cummings.law, not .com, but .law to schedule time for a consultation. I look forward to the opportunity to speak with and perhaps even work with you very soon.